Boris Johnson is urged to cut taxes now to avoid recession, as Michael Gove joins chorus of calls for immediate action. But before we continue, please don't forget to subscribe and hit the notification bell for daily updates. The Prime Minister is battling a growing backlash from backbenchers, business leaders and even members of the cabinet, who fear Britain's rising tax burden is adding to the cost of living crisis. Michael Gove said reducing the tax burden would help level the country and boost investment. If you have some degree of fiscal decentralization, sooner or later, people would realize that if you want to boost economic activity, you're cutting taxes, the Levelling Up Secretary told members of Parliament. Mr. Johnson yesterday claimed that we are bringing tax cuts as fast as we can. As data from the Office for National Statistics showed, production fell 0.3% in April after falling 0.1% in March. Experts urged Mr. Johnson to help businesses and households avoid a recession. Gerard Lyons, chief economic strategist at Wealth Manager at Wealth and former advisor to Mr. Johnson during his time as Mayor of London, urged the government to cut workers' income tax bills. Mr. Lyons said, "The government needs and it has already started to ease fiscal policy. Fiscal easing means tax cuts, it means appropriate tax cuts. In the short term, this means trying to either stop or temporarily suspend taxes on fuel or energy. But as the year goes on, I think it has to be an income tax cut to put money in people's pockets. And next spring, I think it should be a moratorium on the proposed corporate tax hike. Corporate tax is set to rise from 19% to 25% next year, a move many business owners said could cripple their businesses." Mr. Johnson said on LBC Radio yesterday, "We are introducing tax cuts as quickly as possible, but we also have to look after people at a difficult time. There is an inflation spike that we have to get through now." The 0.3% slump in activity in April was worse than the 0.1% growth economists had hinted at. Output was lower in all three major sectors, manufacturing and services. The slowdown in growth will also worry the Bank of England, which is due to publish its Monetary Policy Committee's latest conclusions on Thursday. The 9-member committee sets the bank's base rate and is expected to raise it from 1% to 1.25% as it battles blistering inflation. Mr. Gove said the U.S. city of Nashville is booming because leaders have opted for a low-tax approach that has led to a rush of talent. Taking the Tees Valley in the northeast as an example, the minister said that if Borough Mayor Ben Houchen were given the freedom to set taxes, it would undoubtedly be the case that Redcar would become the Nashville of England. Tory Andrew Griffith said increasing the amount workers can earn over the next month before paying Social Security is the first step in the government's biggest tax cut in a decade, and suggested